What's up, y'all? My name's Olay, and today I'm going to show you how I plan my trade. So I trade options, so day trading and options. So today I'm going to show you how I plan and plan my trade for option trader, option investor. Okay. So we're going to look at how I analyze my stock charts and also how I pick what contract to buy or to sell. But I don't do sell, so I just buy either call or option, call or put. So yeah, we're going to look at that, and also we're going to look at the plan, actual plan, like the papers. So after we analyze everything, then we're going to put that in like the paper plans. Okay. So I'm going to show you in my Google Docs, which is I created that plans for I call it options plans template. So it's gonna be is going to be the link in description. I mean on description, in description. I don't know. Yeah, we don't care about that. So but it's gonna be in the description. Okay. So you can just go check that out if you like feel that what I share here will improve your trading. Okay. So it's gonna be just like that. Okay. Just go check descriptions and download that template and then use it. Feel free to use it as much as you want. So this is what community is for. Okay, so help each other grow, help each other to improve. That is my goal. Okay, all right, now let's get right to video. All right, guys, so we're going to switch it to my computer right. Okay, I might be a bit too close, but if you guys can hear it too loud, I apologize that. Okay, all right. So I have tomorrow, which is Friday. It's a September 4th, 2020 Friday. So the first things that when I the first thing before I plan my trade, first thing I have to do my analyze. Okay, I like to do my homework, my analyze first. So we're going to look at how I analyze my charts for tomorrow. Okay, so tomorrow look at the FSLR ticker symbol, and tomorrow so the patterns that I'm using is a breakout and breakdown patterns, and as you guys can see here, is about to break out patterns. Okay, so about breakout patterns, and tomorrow it's could potential increasing to let's see, let me remove that draw a bit. Is it 2 or 2 3? Okay, all right, so tomorrow it could if it break above this resistance line, the potential of it have a lot of resistance, but also due to the new markets cycle that we currently in right now. It's been like a last week and this week. So the market's kind of like a pullback a bit for the day, so they're kind of like an all-time high, and they're like a bit back a bit, so about like to recover or at the pullback to the resistance line. So tomorrow I'm looking at the if this FSLR ticker symbol break above the 730 and 73 and 67 cents. You break above here, I plan to enter my position, and I plan to enter my position in call options, and that call option is we're going to talk about it in after we do analyze, and the potential it could move up is to the next resistance. So if we have like a small inconsistent resistance here, but the real things here is probably going to be here. So the resistance that I'm looking for is around like a, so I'm looking for 3%, so increasing in around 3%, and my plan is to exit around 76 and 3 cents. So I'm going to exit there. Okay, and if I enter here and some things that might not go as planned, and it drawbacks about like below this resistance line right here that I drew, so I'm going to cut loss around 72.95. Okay, so 72.95, that's where I plan to cut my losses.
So let's see. We gains if a potential gains is 3%, which is the margin profit, and potential loss is like around 1%. Just say that 1%, which is 0.99. So around 1%. Okay. So now after we have after we know where we entry, where we exit, and where we cut loss, now we're going to look at the now after we know that, now why I see the value. So you might not see value in FSLR, but the point here is I'm trying to make is that know where to exit. Know where to entry, exit, and cut loss. Okay, so I see value in here because I use my strategy that I built for my owns, and yeah. So the point here is that know where to what price for you to entry, and what price for you to exit, and what price for you to cut loss when things are not go as planned. Okay, so also I want to point out that if the FLR are not break above here, then this plan is going to be mean nothing. Okay, so we're not gonna do anything. So that is key to take away as well. All right, so after we know where to entry, exit, and cut loss, we're going to look at the stock change. Okay, we're going to look at what contract we're going to buy, and when we analyze and see that the stocks is potential is going to increase in price, then we're going to, if options, we're going to buy call options, because that is what we are going to bet for if the stock is increasing or go up. Okay, so we're going to look at the stock transfer. So the importance about stock option is that make sure you buy it. So here's I see values in like what contract I should buy. So for example, so in this example, tomorrow is Friday, right? So I can't buy this one because it's too, because the five factors. So because one of the five factors that affects the options price is that expiration dates, underlying stock price, implied volatility. Okay, and other two things, which is interest rate and what other things that not so significant. The significant is implied volatility, in expiration date, and underlying stock price. So if tomorrow I'm gonna if like things go as planned, if the FSLR to your simple break above 73.67, then I'm looking forward to buy call options, and I'm going to looking forward to buy it next week's, even it might potentially is going to move tomorrow, but due to the expiration date, and due to expiration date is going to affect the price of the how the options price move. Okay, so if tomorrow for me, I'm going to buy is that I'm going to buy in the money every time. So I'm going to buy in the money for the like the second one of the in the money. So this is first, I call it like first in the money and second in money. So I always buy on the second one. So that's how I see value in this, because here is kind of like a if something go wrong, or how I call it, it's kind of like a more of secure. I would call it that. But yeah. So I always buy in the money for the second one. That's how I see value in. So so the point here is that we look at the option chains, and then and know like what affects the option price. Okay, so the factor, the three factor that like the most significant three factor that affects option is that underlying stock price, which is the price of the stocks increasing, decreasing, and the implied volatility, which is the below implied volatility here, which is implied volatility for the stock's price, and implied volatility also depends on the expiration date as well. So, and of the implied volatility and then expiration dates, that's what is 3 factors that affects the options the most. Okay, so I'm looking for so tomorrow I know if the stocks is move 73.67, I'm looking for to buy call options for the second one. Now I know this contract, so at the strike price of 71's strike price, and expiration date is next week. So I going to if things go as planned, I'm going to buy call for this contract, and after that I have to look at the implied volatility for that expiration dates. So the implied volatility, which is here, which is we're going to buy it at the 11th September 2020, which is the next week's Friday, and we're going to look at the implied volatility. Okay, and when we look at the implied volatility, there are the strike price here, and then this is our implied volatility. So what is implied volatility? So implied volatility is the how much the stock should potentially move. I mean, the potentially move like each day. So this one is implied volatility for how much the options potentially move each day. So or each that's how I look at it. Okay, so the way I look at it is that so the way that I use implied volatility is that when I look at my entry, which is 73 and 67, so to exit to 76, so 73 to 76. Okay, so 73 around here. So as we can see, 73 implied volatility is kind of like a decreasing, as you guys can see below here. The pink percent, that is how much percent on that 73. So 73 and 53, that is 65, and is decreasing to 64, and then it start to increasing to 65, and then increasing and then decreasing. So we aim for 66. So so it's increasing, so from 63, so increasing to 66.12, so 66.12, and then it start to decreasing. So basically implied volatility like this is not consistent, so it's not consistent, so we have to be very, very careful on our positions here. So all right, so after we know the implied volatility of the stocks, which is we know that is increasing, it's kind of like a inconsistent between 73 to 74. I mean 73 to 70, like around 74, and then after 74 it start to increasing, and after that we know that now we have to look at how much we're going to risk in order to gain. And the way that I use to determine to like to calculate how much I risk is that I use the analyze the risk profile, which is the way for Thinkorswim platform, which is the reasons that I stay with TD Ameritrade, even they got like some issue the last 2 or 3 weeks ago. So is that we're going to look at the risk profile. The way to do that is that click on the option and then go to analyze and then buy and then go single, and now it's going to give you the profile. So so it's going to give you, it's going to be look like this, and we have to reset that. So it's going to look like this. This is the graph line of the changing price when the underlying stock price, here is underlying stock price, and here is the options price. So for the pink one is the options price in that day that we trade, and the line is the options price at the expiration date. Okay, so we plan to buy call tomorrow, and at 73.67, 73.67, we have to move that graph to 73.67 around there, and then we're going to exit at 7603. So 7603, 76. I'm just gonna say 7601. Okay, and we're going to move there. Okay, and then we're going to cut loss at 72.95. So 72. So 72.95. So 72.95. Here we go. So 72.95 right there. All right, now after we like, all right, it's going to be look like that. After you have your price line at the point where you like entry, exit, and cut loss. Now the way that the way that I use the risk profile to determine when to get in and like what price to get in and what price to get out is that I use the tool to just basically add up like that, and then it's going to show, okay, so at the 73.67, basically, so we have, so this is very important as well. So today, so this is today, but it's not tomorrow, so we have to change that to tomorrow, which that is 4. Okay, so for tomorrow, if the FSLR moves to 73.67, then this contract, which is call contract, that expires next week on Friday at the 71 strike price, it's going to cost me $4.25 per contract. Okay, $4.25 per contract. That is going to be $425 per contract. That is how much it's going to cost me per contract. Okay, so the way that I manage my risk is that I'm going to risk about $200 to gain $400, something like that. So so the way that I use is that I use this line to determine how much I risk and how much I outgain if the stocks is moved to the potential how much the potential loss and a potential gain. So if I buy, so if I entry the so if I if I entry my positions for call at 71 strike price, that expire next week's for 10 contract, then basically I'm going to risk around, let's say, around $400.38. I mean for $438.65. That's if the potential loss and the potential gain is around around $1,717.45. So it's around there. So that is how like I determine how much I'll like risk and how much I gain. So like I said, I be consistency. So if like you have like small account like me, you like me, for example, I only like willing to risk $200 to gain $400. So I have to like bring my my contract the number of like how much how many contract. So I would bring it to like around, I would buy around like 5 contract. So that basically I risk $200 to actually potentially gains like $800 or something like that. Okay, so but what I aim for is that I aim for consistency and then like exits early if I can't. Okay, but that is basically use the risk profiles for. Okay, so that's how I plan my trade. For I analyze my stocks and then use the risk profile, like use the look at the implied volatility and then look at the stock chains option chains and picks the contract and then do the risk profile to see the potential gains and potential loss, and determines like what price to entry and exits. So yeah. All right, now we're going to put that in a paper. Okay, so we're going to put at the price in the paper, and I'll show you in a Google Doc. All right, so let's get into it. All right, so we come to Google Docs, and this doc is going to be apologize for the that, but anyway. All right, so so this doc is going to be in the descriptions below that I created, and if you find like if you want to use it, feel free, go ahead and use it. If it's going to help you to improve your trading. Okay, so especially if you're like beginner and know like nothing's about how to manage your risk, in like if you're trading like beginner for option and know nothing how to manage your risk, I very recommend you to just use this if you don't have one. Okay, all right, so now we're going to enter like what price we're going to entry, exit, and cut loss. Okay, and percent gains and percent loss. Okay, so first entry price. What is entry price? Is 73.67. Just gonna put 73.67. Okay, and that's the price that we're going to get in. And remember to put the names on the below here, which is what's like what stocks are you what ticker or what company are you going to buy or sell, which is FSLR, FSLR. That is the company that we're going to buy. And then exit price is what's 76, if I remember, 76.03. Okay, so basically just fill this out. Okay, so 76 and 3 cents. Okay, and the percent gain, you just then percent gain is just that, which is 3%, around 3% and 3.12%. Potential loss is 1%, something like that, and just put it there. And then the break-in events, which is you have to minus the gains and then see how much you'll gain there, and then just it give you a perspective, and that's the point of the plan. And also it give you like clarity. And after that, cut loss, do same thing. Your cut loss, same thing. Okay, so yeah, and after that, write your reasons, because I write my reasons. Like, okay, the reasons why you going to make this trade, like not like reasons, but like the reasons that actually like, okay, I like going to enter these positions because it's a breakout patterns. The SMA is like is broke out the SMA line. Like whatever your strategy is, just write out the reasons after you fill this out, and percent sell at price. Yeah, so yeah, feel free to use that. I'm going to finish this, and then it's because this is kind of like a pretty much the end of the video. I'm basically gonna finish this, and then put it like an example at the end of this video, so to show you like what it look like. Okay, yeah, so basically just use this plan, and then just yeah, then you just get ready for tomorrow at the market opens, and then just follow the plans. If like this stock is not move above here, or move like whatever that your plan is, like your strategy is not like at the price that you're supposed to like get in, then the plan it just meant nothing. So just throw that plan out and write a new plan. So yeah, that is pretty much at the ends of the video. Okay, so yeah, so as you can get back to camera. All right, that's pretty much it, guys. Thank you so much for tuning in, and if you
haven't subscribed, please do, because I want you to be part of this community, this lovely community. So we're trying to help each other grow and become a better trader, and also learn to trade and learn from each other, learn everything from each other. So it's a community, you know. And yeah, so if you have any questions, you can join my Facebook group there, my lovely community Facebook community there. Just basically right now it's just only me there, so you can join me there and ask me any questions about trading, so I might be able to help you. So yeah, and thank you so much for tuning in. So I hope I can see you in the next video. Stay safe and stay green.